Private label and checkout. What are we
Yeah.
talking about as regards private label and checkout?
Okay, let's go because this is related to the previous one about the exchange, the role of the exchange. Okay.
We're recording your life.
Um, okay. So Ali, we've talked about how so far Darwinex powers the most efficient, really possible value asset management value chain by having you trade a brokerage account,
Mm-hmm.
then supply through a broker, then I enter a private intellectual property for payment agreement with an FCA regulated asset manager,
Mm-hmm.
which then packages up your strategy as an investable asset and offers that up to now in an open exchange, which is survival of the fittest, where everybody can invest in anyone else.
Okay.
Okay. So, and we've also been talking about the fact that the hardest leap to perform is to go from zero investors to one investor. That's kind of one mega jump. You do the jump from behaving like a trader who doesn't think of return of capital to a manager who first and foremost goes for return of capital and doesn't seek return on capital if it's at the expense of the return of capital. That's one leap.
Mm-hmm.
And then what's the next step in your trader journey? And I'm not talking about the performance. The performance always has to be there because it's condition sine qua non. Okay,
Mm-hmm.
but the next bit is how do you go from obviously zero to one investor?
Yep.
Then it's going to take a couple of years before you get it to be investable, and then comes the next quantum leap, which is how to go from one investor, which is yourself, to two investors. Knowing that as more and more people pile in, the marginal investor should be easier because they're not going to look like fools. They're not already the first. They'll be following another herd, and so many people cannot be wrong.
Mm-hmm.
Okay, and this ties into investor or manager psychology in the sense that what we've seen over time is that it takes time to accrue the first 500,000 of AUM
Mm-hmm.
from like portfolio managers in the platform,
Mm-hmm.
and then at some point you sort of become meta popular in the sense that you are popular because you were popular, and then you become popular, right? So it's kind of like a bit
It
like
is
YouTube
exponential.
videos.
The evolution of
It goes
good
exponential,
manager. It is
provided
exponential. Yeah.
provided the performance sticks, right? So that's
Yes, of a
we're always
performing
talking about
manager.
provided
Yeah,
performance
absolutely.
sticks. Okay, now, but we're now thinking of how to ease that burden from 0 to 1 and 1 to 2. And like Darwinia 1 was about going first and being the first seed investor in backing traders or enticing traders into behaving like managers. That's Darwinia 1.0. That's the 30 million 6-month commitment allocation that we do. Now, that allocation we can afford to do because everybody who wants a piece of that allocation is going to pay us brokerage fees. So
Mm-hmm.
we can basically subsidize the fact that we don't make any money on that because that's not the purpose, by actually enticing our customer base to do the quantum, like the first quantum leap, which is how to go from zero zero third party AUM to one investor.
Mm-hmm.
Now the second quantum leap is from 1 to 2, and the question is, and a lot of people have said Darwinex has failed in their job because they have not managed to bring me investor
AUM. Yeah.
number 2, where by the way you may and this comes from guys who haven't even done the leap from going from 0 to 1. Okay, so that's the other thing. Okay, but and here comes the question: is what is the easiest way to tackle that problem? And what's hit on us is that it's a question of trust. And the only way we can breach that is by empowering the people who want this the most, which is each and every one of the individual Darwin managers,
Mm-hmm.
to seek people who trust them the most.
Yeah.
Okay, and that's the reason why we're now working on like self-prescription or like tools whereby managers can attract third-party investment and by carrying out distribution activities. Okay, and we've covered the legalities of this in a previous video, and I really encourage everybody to do that. And by the way,
Yes,
I'm talking
please.
here as the CEO of an FCA regulated asset manager,
Mm-hmm.
but I'm also talking about as an entrepreneur advising another entrepreneur. And my advice is, and I'm talking now as a manager, like I'm going to be awfully more inclined to trust Ali
Mm-hmm.
if Ali first of all has a lot of personal skin in the game, of
Mm-hmm.
his own pocket in his strategy.
Mm-hmm.
And another layer of trust is going to be if I see that Ali has devoted time to acquiring an additional set of investors from his innermost circle of trust.
Mm-hmm.
Because when that happens, I know that Ali really takes this very, very seriously, and
Mm-hmm.
he's going to pull through all the difficulties that are coming their way. So
Absolutely.
I'm thinking the sequence of attracting investor capital is first is 0 to 1, stop being a trader. And I've defined what a trader means for that. You're going
Yeah.
to continue trading assets, no question about it, but you're not going to trade them like a trader. You're going to trade them like a manager with, return off capital first and
Mm-hmm.
foremost imprinted here. That's kind of step
Mm-hmm.
one. Then it's going to take you, depending on your talent and your commitment, a long time to get to the point where your performance is worthy of your own capital, and then you'll double down with your own capital, so much so that at some point you feel confident enough to think it is a waste of my time and the investors' time that they're investing in inferior investment opportunities. I should inform them that I think I am a worthy investment opportunity,
Mm-hmm.
and start attracting that next, that first, second, third, fourth, fifth investment layer that gets you to something which is still not by way of business.
Mm-hmm.
Okay, we're going to keep well within the by way of business thing. This is still friends and family. I mean, no one can accuse you of being an unregulated producer of muffins if you're giving muffins to your neighbor, right? So at some point you have to meet health and safety regulations, but there's a minimum, like a lower threshold under which you're still in the personal friends and family realm. Okay, so we're
Mm-hmm.
talking about within that realm. So
Mm-hmm.
within that realm, you have to learn to fence for yourself. Because by the way, the lessons you learn in pitching to the closest people who will be the only ones to tell you the stuff that you don't want to hear
Yeah, that's true.
are the kind of lessons that you have to internalize before you can once this becomes by way of business, and then we have to make you an appointed representative for Darwinex, or you seek your own asset management license, which is not that expensive if you've got the Darwinex tag in front of you. At that point, then you will go into the regulated activity of promoting investment activities, but you will have a revenue stream without cost to go with it, and that's when you can take the leap from your existing job to making this by way of business. But I suspect the legality is in many ways, at least with Darwinex, is just your inner fear of I just don't have the balls to go out and do it.
No, this is probably one of the most brilliant answers to this question you've given in all the
Okay, yeah.
series we've done.
So
No, I think that was crisp. This is precisely what
yeah, so
people need
like,
to
and,
hear.
and the thing is, but before you blame Darwinex, don't ask yourself, don't ask what Darwinex can do for you. Is ask what you can do for Darwinex.
Yeah. No, absolutely. Ask what. Yeah, absolutely. What can you do for Darwin X to make this a smoother journey for you? And
Uh, but you're asking me.
no, no, no. I'm saying I was just
I know, like, yeah,
adding to
no,
what you were saying.
no,
Yeah.
no. If you ask me, I mean, like, I think this is a question. I like. That's the other thing is like Darwinex is not mine. What gets me out of bed on it's there's whole lot of shareholders,
Mm-hmm.
there's 50 employees, and there's several thousand customers,
It's
and I'm
everybody.
just
Yeah.
here. I'm here like I'm the first. I'm actually like the second fool. I encourage everybody to watch. There's a guy called Derek Sivers,
Mm.
and he's got a very famous
TED
TED
Talk.
talk,
Yeah.
which goes for 3 minutes, which goes how to start a movement in under 3 minutes. And basically, there's a lone nut, and then there's the first fool, and you're listening to the first fool. Okay, so um, that's how you start a movement, and it's down to you to choose whether you further it or you don't. But we all stand to benefit if this
Mm-hmm.
grows. But the beauty in it is that we all put our best. It's going to get better for everybody because there are network effects. The better the managers, the more investor AUM. The more investor AUM, the bigger the trust,
Mm-hmm.
the better the managers. And in the end, if we all succeed, this will all just be about your merit as a manager and nothing
Yeah.
else.
Nothing
Not
else.
if you're born to Ivy League credentials, not if you can bullshit people very well, not if you're a crook. It's just, do you have what it takes to
Correct.
thrive in the markets?
End of. Brilliant. Thank you.